You're watching the NWR Resources Conference, November 2020. On the line, we have West African Resources. West African Resources is West Africa's newest gold producer, pouring first gold at its Sanbrado project in March 2020, ahead of schedule and under budget. West African expects to produce more than 300,000 ounces of gold from Sanbrado in its first year of production. It expects to average production of more than 200,000 ounces of gold over the first 5 years. Since commencing production at Sanbrado, West African announced the acquisition of 1.1 million ounce Toega gold deposit, and it expects to deliver a resource, reserve and life of mine production update before the end of this year. On the line, we have Richard Hyde. Richard is West African's Executive Chairman and CEO. He is a geologist with 25 years of experience in the mining industry and nearly 20 years of experience in West Africa specifically. Richard has managed large exploration and development projects for gold and base metals in Australia, Africa, and Eastern Europe. Founding West African Resources, Richard has led the company from incorporation in 2007 through its IPO in 2010 to the achievement of its status as a gold producer earlier this year. Over to you, Richard.
Thanks very much, Laura. Thanks again to NWR for organising the virtual conference. I'm very pleased to give you an update on West African Resources. I'll just slide on to just the forward-looking statements, and this is on our website. It's also on the ASX if anyone wants to look at it in more detail. So West African Resources is West Africa's newest unhedged gold producer. We had a pretty transformational period from discovery of the M1 South high-grade shoot in 2016. Drilling that out in 2016 and 17, funding the company in 2018, and we built through 2019 and poured first gold in early 2020. So, and throughout all of that, we built our team up from the original exploration and sort of resource building team to a company building team and an operational team. We're targeting annual production of over 200,000 ounces a year over the next 5 years. I'll talk a bit more about what we expect to do, or where we expect to take that in the next over the next 10 years by the end of this year. We've got about 3 million ounces in resources, just under 2 million ounces in reserves. As mentioned before by Laura, we've acquired the Toega deposit, which is about 14 kilometres away from Sanbrado, and we're in the process of starting work on that at the moment. We've got an aggressive drilling campaign underway at the moment, so we've currently got 2 rigs drilling at M1 South. We're drilling at nearly 900 metres vertical, and the aim is to add another 4 or 5 years mine life, so that we can look to have a 10-year mine plan on the underground to match the 10-year mine plan on the open pits, or plus 10-year mine plan. And we're kind of targeting a resource reserve and life of mine production update at the end of this year. The photo here you can see is part of our team on site. Our first gold shipment, which was in about May this year. Just on the capital structure of West African, so we've got just under 880 million shares on issue. We've got about 72 million US in cash. We had about 25 million in gold at the end of October. We made our first payment to Taurus a few weeks ago, so we've reduced our outstanding debt by $25 million, and that gives us the market cap the other day. Well, we're just under $1 now, but we're around about 900 million Australian. Board of management, so myself obviously founded the company in the late 2000s and have taken it all the way through to production. Lyndon Hopkins is my fellow executive director on the board. We've got 4 non-executive directors: Rod Leonard, Stu Finlay, Libby Mouncey and Nigel Spicer. We've got a very balanced board, and all of these individuals have got specific experience in resources and mining. The management team is still building out as well, with Matt Wilcox is responsible for the build of Sanbrado. He stayed on board. Luke Holden, who's our GM operations. Vince Morel is our GM of exploration and new projects, and he's also our country manager in Burkina Faso. Our CFO, Padraig O'Donoghue, Todd Giltay, GM Finance, and our GM of Tech Services is Stu Cruikshanks. So the position of our project in Burkina, we're in the southern sort of central region for the Sanbrado permit and the surrounding permits. We've got the new Kamoe project, which we're just starting work on over in the west of the country. The project is conventional, so this shot was from our feasibility study, but you can see it's been updated with some recent imagery beneath it. You can see the water storage facility there on the right, the tailings dams facilities. The first cell is built, the second cell is being built at the moment. The water storage facility is full at the moment with nearly 2 million cubes of water, and that was pumped up a 21-kilometre pipeline that was built during construction. That was filled up during the recent wet season. We've got conventional open pit and underground mining. We've got contract mining with Parenti on the open pits, and we've got Burncut offshore for the underground mine. We've got a conventional SABC circuit with CIL recoveries. It's currently running above nameplate capacity, and that's one thing we will do later this year with our life of mine update. We'll increase throughputs certainly for oxide and some of the transition material, and that probably sees us coming up closer to 2.5 to 2.8 million tonnes per annum of life of mine throughput. We've got I mentioned before, resources and reserves, and we're looking at expanding those at the moment. We've got a pretty solid first 5 years, and we're currently backfilling that schedule at the moment with deep drilling. First 5 years of production, we expect costs to be around about $600 an ounce, and life of mine costs at the moment around about $650 an ounce. And there may be some increase in those costs due to dealing with COVID, and also which has also increased some of our travel costs. We've also had to increase our staff on the underground in particular, and that'll sort of be fed out later on in the next update. So just talking to production, so this is a new slide which combines our the message from Diggers and Dealers this year, and then also from the recent quarterly report. We've processed just about 900,000 tonnes in the last quarter at 1.7 grams. About 870,000 tonnes came from open pits at 1.5 grams, and about 22,000 tonnes from the underground at 10.5 grams. Most of the underground feed was came out of development ore. So we've processed our first panel on stoping ore. We're into our second panel at the moment, and the third panel is being drilled out. So the underground mine is back up running at full productivity, and we've increased our contractors' staffing of that over the last 6 to 8 weeks. That saw us producing just over 45,000 ounces for our second full quarter production, and the costs coming down from about $1,200 an ounce to about $1,000 an ounce for all-in sustaining costs, and they're very close to all-in costs as well. We expect those ounces to increase over the next 2 or 3 quarters, and we expect the costs to continue to come down. So M1 South is the engine room for the project. Currently, we've only really been processing underground ore, stoping ore for the last sort of 4 to 6 weeks. We've got about 450 metres vertical beneath the open pit, so we're running concurrent open pit mining and underground mining on this, and we've been drilling beneath that because we knew that mineralisation was open at depth when we drew a line through it in 2018 to fund the project, and the hole that we drilled at that point was 25 metres at 15 in DD228, and subsequently we've hit mineralisation in every hole we've drilled beneath that, and we're now drilling at nearly a kilometre's depth, and the plan is to give this mine another 4 or 5 years mine life to have a 10-year mine plan. The deepest hole we've got so far is DD235, and that hit 7 metres at 20 grams. There's some low-grade mineralisation around that as well. We're just waiting on assays for 237, and we've got holes going down either side of that at the moment. So the production profile, this is out of our feasibility study, and we've kind of pulled back a little bit from the high production in year 1, given that we've had some impact with COVID. We expect those ounces to be transferred into 2021, and probably some into 2022, given that we've moved our open pit operations around a bit to combat the early startup of the process plant, and also the underground mining rates fell away for the last 2 quarters due to a lack of people really on the underground, but that's been rectified recently. So the plan is we want to drill out the back end of the schedule and fill it with high grade underground material, and this also doesn't include the impact of Toega coming into the schedule, which we'll be working on, and we expect to have that into the life of mine plan next year. One thing we haven't done for a while is exploration, so we've been getting back into it this season. We've got drill programs ready for Toega and also on the Manesi permit just north of the mine. We've recently acquired the V3 permit, which is just to the west of Manesi, or just to the northwest of Sanbrado. But we've got a very large land package here that's got kilometre scale geochem anomalies on it. We sit in a very attractive position in Burkina Faso. We straddle the Marcoy fault, which runs from north to south and hosts a lot of significant gold deposits in Burkina. Our program for 2021 is over $7.5 million US, includes more than 25,000 metres of RC and diamond drilling, more than 30,000 metres of auger drilling, and also includes all of the Toega feasibility work that we're undertaking at the moment. So the big change for us was adding a second project in, and this is our growth project that we're focusing on at the moment. It's a good deal with B2 Gold, where we're acquiring Toega for $45 million US in stage payments. Like I said earlier, it's only 14 kilometres away from our plant at Sanbrado. It's 1 million ounces, 1.1 million ounces at 2 grams, and we'd expect that, in sort of the middle of the current mine schedule, we'll be displacing some of the lower grade open pit ore from Sanbrado with the higher grade material from Toega. And we'd expect that to increase the mine life and also the production profile from those sort of mid-years. The Toega deposit itself, it's situated in a 250 square kilometre permit. The Toega expression at surface is about 600 to 800 metres of over half a gram in auger drilling, and then it's been drilled off initially by I think Randgold had a few holes into it early in the 1990s, and then really B2 made some headway with it from about 2015-16. We've also got some advanced exploration targets at V10, which is to the south of Toega. We've got some very interesting geology at the Tugu prospect in the central portion of the Nkomgo permit, and we see some analogous settings there with our Sanbrado project. So we're very interested in getting some auger drilling across that in this field season. The deposit itself, the Toega deposit, is substantial. It's open along strike. It's about 1,200 metres in strike, about 400 metres wide and 400 metres deep. It's got the test work that's been done so far. It's got conventional metallurgy, sort of mid to high 80% recoveries on 106 micron grind, and it'll be suitable for process through our process plant at Sanbrado. The current estimate is based on about 37,000 metres of drilling, and about 65% of that drilling is quite tightly spaced at less than 50 by 50 metres. So our work's already started during the wet season, so we've started doing some social and environmental work. We've got drill programs planned, and as soon as we finish the drill program at M1 South, we'll be moving the rigs down to Toega, and we'll be getting stuck in there first with some geotech and some metallurgy, drilling for metallurgy, and then we'll look to do some infill drilling and start working on some pit optimizations and bringing it into the mine schedule for Sanbrado. In long section, you can see that it's really only been tested lightly at depth. There's a very significant pot of mineralisation in the central part of it, with some substantial intercepts, 75 metres at 2.2, 75 metres at 2.6, 50 metres at 2.8, and it goes on 99 metres at 2.6. And those intercepts include internal waste, and basically in the central area where most of the mineralisation is captured. Of course, what we're doing in Africa is really important for our host community. So we've made some substantial E&S commitments to the people in our surrounding area. We are the biggest employer in the region now. We employ 25% of our staff are women, 95% of our staff are African, and about 50% of them are local. So 95% from Burkina itself. So we're making a very positive change in our region. We're contributing through the Community Development Fund with about 1% of our revenue being paid out to community projects. We've already built substantial facilities for our local stakeholders. We've also installed a number of arsenic filtration units. So the local people in our area are now drinking fresh potable water, which historically they've been drinking water that was quite high in arsenic, which is a really positive change that we're making. And all of the work that we're doing on our project is being done to world best practice standards. And I think you'd be able to walk across our project in Burkina Faso or another project in Western Australia, and you really wouldn't be able to tell the difference. It's the sort of standard that we're holding ourselves to. So we've already ticked a lot of stuff off in 2020, and with obviously completing building and pouring first gold, reaching commercial production in May. And then we've started drilling again. We've already returned some significant results. It shows that M1 South is going to be a gold mine for a very long time. And we've just recently processed our first stoping ore, so that's coming online now, and it ramps up over the next sort of 6 months to max production, towards the end of 2021. We've already made our first debt repayment, which is well ahead of schedule. We weren't due to make our first debt repayment until the 31st of March next year. And look, if we still keep building cash like we are at the moment, we'll certainly focus on paying down further debt ahead of that time. The exploration drills are starting up again, so you can expect more exploration results to come out over the next 6 to 9 months with the current field season getting underway. And we're aiming to have our resource reserve and guidance update out by the end of this year. Of course, we've done all this with a quality team, and we've put plans in place recently to make sure we keep the key people in this team together, and looking to reward some of our key people who have really put in some massive efforts this year in Burkina Faso. A lot of our people have had to do significant stints in isolation, in hotel isolation back in Australia, Canada, and South Africa, which is really challenging, and it's a credit to our team that we've not only ramped up during COVID, but we're actually hitting some of our best months of production now. We're also working on aligning our ESMS with international standards. And one thing we haven't really talked a lot about is the fact we're unhedged. So the deal that we did with Taurus in 2018 allowed us to build this project without any hedging at all, which has meant that we're really benefiting from the current high gold prices. And so going forward, we're really going to focus internally on growing the company, ramping up to full production next year. We're going to drill aggressively into next year as well, grow the resource and reserve base, and we've, as I just mentioned before, we've kept our team together, and we're going to focus on targets that we've already got in our portfolio for the medium term. Thanks very much, Laura. I'll hand it back for any questions from any investors.
Thanks so much, Richard. A couple of questions for you. If you could just give us maybe some indication on the Sanbrado plant, and if you have any plans to upgrade that for a greater production capacity.
Right, so the plant's been producing at higher than nameplate capacity already. So we took the opportunity in 2018 when Matt Wilcox came on board to increase the size of the mills from what we had in the 2018 feasibility study. So that came out in the 2019 feasibility study. So we ended up with 2 4-megawatt mills for a SAG and ball mill. We increased tankage on the project then as well. So we went from 1,600 cubes per tank for 7 tanks to 2,000 cubes per tank for 7 tanks. So we've already built in quite a bit of extra capacity. We'd have to see a major shift in and the size of the projects, or size of the resources around our project to want us to compress that mine schedule to increase throughput. So I think it's unlikely we'll do that. I think we've put most of our growth capital in, or our capital was up front rather than, and we thought about that in 2018 rather than looking to build smaller and then expand later.
Thanks, Richard. I know you're very well versed in sovereign risk. We do have a question around if you can comment on this and yeah, just provide an indication around sovereign risk about where you're operating.
Yeah, sure. Yeah, I think there's a bit of a misunderstanding between political risk, sovereign risk, and what it actually means. Clearly, in the last 5 years, there's been a humanitarian crisis in West Africa, in Mali, Niger, Burkina Faso, and really around that sort of northern border, which we've seen 300,000 or 400,000 people displaced out of southern Mali into northern Burkina, and then they've been pushed down further. So it's a serious situation, and I think what we're doing in Burkina is we're playing our part. So we've invested a lot of money in our projects. We're already paying taxes and employing a lot of people. So we're making a positive change in that way. Our project's located in a sort of central region. So at this stage, we haven't seen any reduction in the safety or security in our region. Certainly the West in 2019 saw some issues with one of Semafo's mines, which is now back up and operating with Endeavour, which is very positive. So that sort of situation is rectifying itself, I think. There's a lot of work going in from the Burkina armed forces and the French forces over in that region. But it's something we're seeing globally now, that the world that what it was is not the same. And in 2005, I did a trip from Ghana through Burkina, Mali, into Senegal, down into Guinea, and then into Sierra Leone. We drove the whole way with a couple of geologists, and we looked at projects. And it's just something that you wouldn't consider doing now, unfortunately, which is a tragedy. But we believe that we can operate safely in Burkina. We've got very strict security protocols for all of our people, for all the transport of people in and out of site. And, we wouldn't be there if we didn't think we could operate safely.
Thanks for that, Richard. And I'd like to now move on to a different challenge, the challenge of COVID-19, perhaps. Has your fly-in, fly-out practice been modulated over the last 6 or so months now? Yeah.
Yeah, so it's been dynamic. So the situation has changed quite a bit over the last 6 months. So initially, we had quarantine at both ends. Initially we had people locked down on site, and then commercial flights hadn't restarted, and we had to sort of work in with other companies in Burkina. So we managed to get on charter flights that have been organised by Semafo and Endeavour, and also some of the contractors. So we managed to start getting people off site and getting new people in to replace them. And then on about the 1st of August, commercial flights started up in Burkina again, which it made things a bit better so you could plan. But then we've had issues, with getting people back into Australia, in Western Australia, for where we've got a lot of our expats who work on site coming back to. We've got 75 people a day. That was the limit. So it presented a lot of challenges to get people back on a sort of a semi-normal roster. Even when they were coming back to Australia, they're still doing 2 weeks hotel isolation, which is an added cost to the business, and also it's an added mental cost to the people that you're employing, because to do it once is probably manageable. To do it 2 or 3 times, like some of our people have done, is a real challenge, and it's a real credit to them that they've managed to do that. And then we've got our own test kits on site. We've managed it pretty well. All our people are getting tested before they can leave Australia, or if they're leaving Canada, they've got a test before they can get into Burkina. They've got to test negative again before they can leave Burkina to come back to Australia, or whichever their home country is. So, and that has caused us to lose quite a lot of productivity, unfortunately. But that's just the reality of operating through the last sort of 6 to 9 months of COVID. And so to combat that, really where we can really swing things on site is with the underground and getting it back on track. And we've managed to do that in the last month, I think. So we're basically drilling out our third panel at the moment, and that's going to kind of keep the production level pretty high going through into next year. And we've done that through collaboration with our contractors, certainly Burncut and also with Parenti for the open pits.
Would you say that you're close to, or are you almost back to full productivity at that underground site?
Yeah, so the underground is back to full productivity now, which has been a challenge, and it's a credit to our guys and also to Burncut for digging in and finding the extra people for us. And so typically, if you've got a jumbo operator, you might need 3. So you'd have one on day shift, one on night shift, one on break. Through COVID, you kind of need 5. You've got one guy in isolation. You've got one guy who's just missed a flight and you can't get him again for the next 2 weeks. Another bloke might go, well, I've already done 3 trips in hotels this year. I've kind of done it for this year. I might come back next year if things get better. So, it's been challenging, but the underground right now is back at full productivity. We've got additional, key people on site, which covers off long hole drilling and the jumbo operators and sort of other supervisors, which is really positive. We're also putting a lot of effort back into training our local workforce. And, I think, within the next year or two, some of those key positions, perhaps not the jumbo operator, but perhaps the long hole drillers, will be able to replace those with locals, and that's really positive as well. So, I mean, our goal here is to train people up, obviously to make money for our shareholders, but train up the local people. And expats are expensive, so and also you can see what happens when you've got these global interruptions, how challenging it becomes running a international business. So, we've got a lot of our focus is on training our local workforce.
What is the composition of the locals to expats, out of curiosity, right now, and what do you see that looking like going forward?
Right now, and this is, if you talk to Australian companies who kind of have a Indigenous employment policy, for example, we're about 95% of our employment is with Burkinabés. About 50% of them are from the local region, so within sort of living and driving distance of the project. And we've got about 5% expats, but some of those expats are also from West Africa. They're either from Ghana or from Guinea. We've got some expats from East Africa, Kenya and Tanzania. So it's a bit of a mix. And then we've got a real mix of sort of United Nations, I suppose, who are from Australia, South Africa, Canada, the UK, France. It's a real sort of mix of people on site, which makes life pretty interesting.
Yeah, that's good to hear. A diverse workforce is a good workforce.
Oh, look, and I should actually say, 25% of our workforce is female, and it's increasing,
which is unique in
well.
mining. Yeah.
Well, it's I don't know any other companies in Australia who maybe set quotas for that, but look, I really believe in equal opportunity, and we certainly are managing to beat a lot of the sort of the quotas that I think Australian companies are putting on themselves. So it's really positive.
Good to hear. Thank you so much for joining us today, Richard, and best of luck.
You're welcome. Thanks very much.
Thanks.